Happy Monday, everybody. I hope you had a great weekend. Whereas we usually have a full week now that we're through the holidays, we will once again have another break in the action this week as the 39th President of the United States, Jimmy Carter, will be mourned on Thursday in a national day of mourning. Then we will get a full week. That's next week. Another long weekend for MLK Day again after that. So a lot of short weeks coming up. So if you like short weeks, there you go. Today is January 6th, 2025, and this is your first Monday market update of the new year. Happy New Year. This new year seems that it will pick up where last year left off. I'll review the updated risks that I am seeing with this market in a bit. But for now, let's review last week's holiday shortened week and let's preview this week ahead. As I mentioned, another week with a trading day interruption. Last Monday, markets opened lower, led by tech sector weakness as year-end rebalancing and thin holiday trading amplified volatility. President-elect Trump's endorsement of Speaker Johnson helped to stabilize the markets mid-session, but the relief rally was short-lived. Thin markets, due to so many trading desks being empty, lent itself to stronger swings, as I've been telling you, expect. Remember, algos don't get that information too well. The Dow closed down 1%, S&P declined a bit more than 1%, and the Nasdaq fell almost 1.25%. After initial rebound fueled by strong Chinese composite PMI data Tuesday, markets did turn lower after that bounce. The last trading day of the year, as rising treasury yields and reminders of fiscal challenges weighed on the sentiment. Treasury announced $229 billion of new bonds coming to market. Now, please recall that I have mentioned this time and time again, that the amount of debt that the U.S. will have to issue to support the spending that we are doing could bring yields up and thus present a headwind to stocks. Tuesday wrapped up the year with a reminder of that. The Dow finished lower just slightly. S&P lost about 0.5%. The Nasdaq fell 1%. And 2024 was in the books. Let's put a point on it. The unofficial numbers for the year: Dow up 15%, S&P up 25%, the Nasdaq up 29.5%. The best of the bunch, sector-wise, communication services up 40%, infotech was up 36.5%, even financials were up 30%. At the bottom, the only one in the red was actually materials, down just 4 ticks. The next worst was healthcare, which was up 2.5%. Markets did take the day off on Wednesday to recover from the not only the normal New Year's Eve festivities, but also the horror of dealing with so much left unknown from the events of New Orleans and also Las Vegas. Thursday, the first trading day of the new year, saw early gains, and that had everybody talking until that all faded as U.S. economic data, including jobless claims falling to 211,000, pushed Treasury yields higher, with the 10-year returning to 4.6%. Equities did briefly test the post-election lows before recovering modestly into the close. The Dow dropped 1/3%, S&P fell 1/4%, and the Nasdaq declined 2/3%. Not the best way to start. Could have been better, but also, of course, could have been worse. Friday bought some green. Yes, markets finally showed some life. On the positive side, overall markets opened up about 0.5% higher. Worry that it would not hold like Thursday persisted, but overall markets seemed to be tired of going down for a bit. Fed head Barkin was overall optimistic on the U.S. economy, and that not only the implication of less rate cuts was what market took from his talk. Recall how bad the breath was in the market over the last couple of weeks? Well, Friday, 4 out of 5 S&P stocks were up. All 11 sectors were up. Tech was the band leader, as has been the case recently. From the "no one in the market with the rose-colored glasses is paying any attention" file, according to FactSet, 106 of the S&P 500 companies have issued some kind of fourth quarter earnings guidance, and of those, 67% of negative. That's about 5. That's above the 5 and 10-year averages. Percentages of companies issuing positive guidance below the 10-year average. To be fair, even with these, the earnings growth estimates still look good into 2025. At the end of the day, markets held their gains. The Dow was up 0.75%, S&P up 1.25%, the Nasdaq up 1.75%. That still did not pull them into the green for the week. For the week, the Dow was down 0.2%, S&P was down 0.5%, the Nasdaq was down 0.5%. All that, and recall, averages are still not far from record highs. Let's look into this coming week and beyond. Before we mention anything else, of course, NVIDIA CEO Jensen Huang will speak at the Consumer Electronics Show tonight in Vegas. That will be very carefully covered. Watch for disappointments or excitement. Fed is back in the spotlight, sort of. We'll get Fed heads Cook, Barkin, Harker, Waller, Schmidt, and Bowman. We will get minutes from last month's meeting, and these, not like they have been in the past, but I think these are going to be interesting. So we'll have to see what comes of those. Eco data will also be big. Durable goods today, and I mentioned last week where that fits in. JOLTS Tuesday, ADP and jobless, continuing claims, all the preview to Friday's non-farm payroll. The labor market will be the spotlight now, but heads up for next week because we're going to get CPI and PPI, so we'll watch for inflation again. We'll also start to see big banks start off the new earnings season. And the first Fed meeting of the year will be on January 29. That list gives you the next few weeks of watch points. We did get a glimpse of the next political concern as the speaker barely made it through, and that worries many about the narrow majority. Geopolitics is still front and center around the world, and of course, even on our soils. As President-elect Trump has said, one day will be all he needs. We're going to have to watch what happens on that one day. And finally, as I continue to note, this market is priced for perfection. There is little margin for error. Valuations are high, concentration is high, rates are high, but everything is looking good, as it always does, right up until it does not. So please keep going over your risk audits with me. It is so important right now. Let's see what this week's going to bring. Not a full week. First full week should be next week. Let's see. Make a plan and stick to it. Let's review what that is. For now, keep in touch and stay warm. Have a great week.